of Linn and Associates with your metal market wrap-up, and this wrap-up is for Monday. We're at the 29th of August, 2022, about 5:35 p.m. Central Time. Now, it's interesting what the markets are doing. I was doing some research today as I'm getting ready to do some special reports and the like, and I'm looking at how September typically goes. And in stock indices, it's the worst month of the year, historically speaking. I'm going back 100 years or so. It loses about 0.6 of a percentage point, but it's a net loser for the month. So it got me thinking. So we get this out of the Fed. We've seen a break low that's happened in June, and now we get the secondary break. I'll talk about all this in my financial market wrap-up. Suffice to say, in the metals, the problem facing the market is the weighing on the market of higher interest rates now from the United States. The big battle is on in Europe. Are they going to go 0.5 or 0.75 of a point? That has suddenly become the focus there, be it Korea, other countries. Everybody's going to fight inflation. And because that is what happens when the central banker of the central bankers, which is Fed Chair Powell, the head banker, makes a move, says statements like he did, and shows what's going to be. If you have any doubt that this Fed is not going to follow through, I think you're making a serious mistake. And I'm sure the naysayers are out there, and they're saying he can say one thing, but as soon as this issue gets that we're tipping into the recession, as Senator Warren, Elizabeth Warren, already said over the weekend, he'll blink. I don't think he's going to blink. You're looking at a man that this is probably his last term. This will be his historical event. This is going to be the year of his legacy because he's fighting the genie out of the bottle, inflation. You bet against him. I'm betting with him. Just the opposite. I think even the board members are there now where they're going to stay 50, 75 basis points until they see inflation's got a trajectory that is slipping back. And at that point, they'll change gears and go 25, 50 points, and then 25 points until they're very confident that they can do the pivot where no interest rate increases are necessary. The next unknown that'll be the headwind is in September, we start the runoff of the balance sheet. I haven't the slightest idea what that even means or what it's worth in the market. Does it have an impact or doesn't it have an impact? I don't know, and we're all about to get an education on it. As it is, the currency markets are sort of mixed. The dollar up, 4 ticks? So there's no big move there at all. So if we take a look here at the gold chart, first off, you're still under the 18-week moving average of closes, so the bias remains to the downside. When I look at the chart action, obviously I'm looking at the spike low. Is the market going to go retest that or not becomes really the question in my mind. We have a pattern that's clear-cut of lower highs and lower lows. That part's bearish. The market is underneath the 18-day average of closes, which is the red line. That number is 1779.80. And to get to it, if it were to rally tomorrow, it would break the downtrend because it would have to go through the last break low of 1778.80. So no spot that I see there that's worthy of selling. And you're at the Bollinger Band. Now, each time you've gone to Bollinger Bands in the back, gold tends to stop the decline. Can it run on the other side of it down? Yes. But it's one of those markets that doesn't like to stay under the Bollinger Band. You can just visually see it. Take a look yourself. So to get a bounce here would not be a surprise to me. And when I look at momentum, you're oversold. Slow stochastics are not doing what they did back here in July. What they are doing at this point is this was embedded, this is oversold. So I have an oversold market that's reached downside targets, finding support against the Bollinger Band and could give you a bounce from it. That's the best way that I can surmise what is going on. In the gold-silver ratio, it's getting terrible for silver. You're now back up to where you were. Are you going to make a triple top or are you going to break back down from here? You're at a crucial point. It's going to tell us very shortly what it is. The pattern on the chart is one of a higher high and lower low. But what about this? Are we embedding? So to embed, you have to have the blue and the red lines, called the K and the D lines, staying underneath, if you will, 20 for at least 3 days in a row. You cannot count today. We don't know where today's going to close, but you can count Monday's settlement. We're already in Tuesday trade. So there's one. The day before is one, not the day before. Tomorrow's the key day. You typically don't embed. So I'm going to expect a rally that tries not to do that. And if it still ends up embedding, then from there I'll make up my mind, hey, how do I play it? And if you've taken my enhanced Bollinger course, you know I'm prepping you. I know what I'll be doing, but it's just where we're at on that chart. In the copper market, you know, as everybody is now talking slowdown, be it China, be it Europe, more interest rate hikes, the United States, copper's just going like this. When it was coming up here, this was on Thursday, I said to you, I think the pros are taking money off the table. You're not embedded. You're hitting the Bollinger Band. I think they can come in better. Look at my tape. That's what I said. When we take a look, let's go to the next chart, which is platinum. You're riding the lower Bollinger Band. Not quite on it. It's not a Gorilla Glue trade. You're not embedded. You can get a bounce out of this real easy. Resistance, fairly formidable up here. But why would I want to be long the platinum market or palladium is part of my thinking if business is going to slow down unless auto sales are going to pick up? Because let's face it, it is a catalytic converter along with the palladium market, which, as I said, when it rallied here, I was surprised it got so easily over the 18-day average of closes. It's certainly in an uptrend. It's finding support on pullbacks here, a surprise to me. This is your biggest catalytic converter. So maybe that's telling us something is positive. I just frankly don't see the whole story. In the dollar index, if you get back to the Bollinger Band, look for the resistance. Pullbacks in this market, I think, get bought by the pros until the red line closes under 79. It's at 87.53, and I don't think it backs off from there until we get to the point where it does, all right? So I'm still very friendly in that market. Now, I know as traders, some of the things you want to learn about are what the pros do. How do they go about things? Well, years ago, Modern Trader put out this publication, and with their permission, I was able to resurrect from them. And you'll find some interesting parts here. I think you'll find some of these chapters great. If you don't know what GAN is, you might want to learn about that. A lot of people like Fibonacci and GAN. Relative strength, RSI. I like slow stochastics, but the concept is identical as to what it is. Optimizing stops. If you think I don't use that, you're wrong. I do, but I do it with my swing lines. They tell me better than that. And if you take my charting course, you'll learn out why. But there's other opinions. I want to show them to you. So, Modern Trader, technical tools, how do you get it? Go to our website at iraepstein.com. And when you're there, just go to free offers or just take your cursor, move it to the top up here. You'll see appearing at that point in time an icon. On the icon, just give it a click, take you right where you have to be. I'm Ira Epstein. You have a great trading day. I'll see you in my next videos right after this one.